Hey, it's Richard with Matthews Wealth Management. Today we're going to be talking about income taxes, a very exciting category of discussion, and specifically we want to get the lingo down and understand how to talk about taxes when it comes to working with a professional, financial professional, your tax preparer, friends, family, whatever. So we're going to run through an example of a hypothetical couple. They're married, filing jointly, don't have kids, and we're going to keep it as simple and streamlined as possible just to kind of iron out how this works and make sure that we really understand kind of the basics of income tax. So I've got an example here, this married filing jointly couple, and we're going to say that they're paid on a bi-weekly basis. So that means they're getting paid 26 times throughout the year. So first thing we're going to look at is, let's say the paycheck. They're going to get paid on a gross amount of $4,800, and that'll be every 2 weeks, right? So out of this paycheck, and we're kind of merging their two incomes together here, but out of this paycheck of $4,800, let's say that they filled out their tax documentation properly when they came on board at their employer, and they said that they were married, filing jointly, and no exemptions, right? So then there's a certain calculation that runs through payroll that we're not going to dive into here, but we want to see how that actually comes out in terms of withholdings. So if this is our gross, we're going to have our federal tax withholding, and that's generated from what we said that we wanted them to withhold on those employer forms. So in this example, we would be withholding $789, and that's per pay period. On South Carolina state withholding, that's the example that I'm using here. I have a lot of clients in North Carolina, Georgia, Florida, but primarily South Carolina, so that's what we're going to go with here. So this South Carolina withholding would be $288. And then lastly, you have your Medicare and your Social Security withholdings, and those come out to be $367, and that's per pay period. So when we take our 48 gross, we subtract out everything. We're not going to count 401k contributions or giving or life insurance. That's some other stuff to confuse us, but let's just keep it simple here. So this says that this situation, we would have paycheck of net $3,356 per pay period, okay? So let's extrapolate this out and look at the annual amounts as far as how much we're earning gross, how much we're withholding, and then how much we're bringing home on a net basis. So we're just gonna take all of these times 26. I'm not gonna write that all over the place, but so we take 4,800 times 26, and that gives us $124,800 per year, okay? So it's a good income, very good income. So you'll see later why we're using these numbers here, but when we take the 789 times 26, that gives us $20,514. We've got our South Carolina 288. Over that same year, we've withheld $7,488. And Social Security, Medicare, that is a total of $9,542. So now our net take home for the year for this couple here is going to be $87,256. All right, so this is a very middle of the road, normal situation that we would come across when we say we've got a gross amount of 124, we'd be taking home around 87, and that's what goes into our expenses, that's what we give, it's what we tithe, it's also what we put back in savings, to Roth IRAs, brokerage accounts, real estate, etc. So this $87,256 is what we've got to work with, but let's talk a little bit more about income taxes, and specifically what this couple is going to have to settle up with at the end of the year, both to the federal as well as the state level, okay? So we're going to spend most of our time here on the federal income tax side of it, because that's the one that most people kind of get lost in the discussion when it comes to tax brackets, tax rates, etc. So first things first, we're going to figure out how much of this income gets counted for taxes. And we're going to go very simple here. This is not to be considered tax advice by any stretch of the imagination. You need to work with tax professionals to do your taxes, but just to kind of give you an overview of how this looks. Here we would have a gross income of $124,800. And it just so happens that we have a standard deduction, as it happens for our hypothetical couple here, of $24,800. So the IRS allows us to just go ahead and deduct this and not have to pay taxes on it. Okay, you can itemize, you can do all sorts of things to come up with this. There are exemptions, there are credits, children, etc. All this can change these numbers, but you see why I went with the $124,800. It makes it a very simple 100 grand that we've got to figure out how to pay federal income tax on. Okay, so the way that federal income tax works, I'm going to go ahead and erase this, make some room on the board here. But if we're working with $100,000, the first dollar, anything from $1 up to $19,750, that's the first tax bracket. Those dollars are going to be taxed at 10%. Okay, so 10% of this amount of money that we've made in the first bracket is just a very simple $1,975. Running out of ink here in my pen, but so the next bracket, because we've made more than that $19,750, now we're going to look at $19,751, and this bracket runs all the way up to $80,250. And these brackets change depending on whether you're married, filing separately, single, head of household, etc. But like I said, this is all based off of married filing jointly. So what we do is we take $80,250, we subtract the $1971, and then we apply a 12% tax rate to this percentage or this portion of the income here. So if we do the math on that one, that comes out to be our largest portion of tax, and that is $7,259.88. I'm going to drop off the cents just to save some board space there, but so that's a pretty sizable amount of federal tax that's due. Now we go from $80,251 up to, and the top of that bracket is much higher, but we've got 100 grand that we're working with here. So let's just go ahead and plug in our 100,000 that we would be referring to as adjusted gross. That's some terminology you don't really have to worry about, but the taxable amount of income here is 100, and we're going to take the difference of that in the $80,251, and that bracket is taxed at 22%. So that's a much bigger jump when you go from 10% to 12 and a huge 22%, but it's a smaller amount of dollars that are actually being taxed there. So that amount comes out to $4,344. All right, so we're going to pay $1975 on this chunk of income, $72.59 on this chunk, and then $43.44 for a grand total here. If we add it all up, it says that our tax bill is $13,578. There's some rounding in there with the cents, but $578 is how much we're going to have to owe in taxes at the end of the year. So if somebody were to say, well, how much did you pay in taxes for this year? Well, we could come over here and say, wow, I paid $20,514, but I really only owed $13,578. So that we would look at our federal refund, and so we would just take the difference there. So that means that they're going to give us $6,900, and the dollars and cents got mixed up here, but I had $6,034. So ignore the rounding going on here, but $6,934 is what I'm following on my piece of paper. So then the South Carolina refund here, we have to establish how much actually we owe to South Carolina. So South Carolina also has a bracket system. It's much more consolidated on the first $14,000 of income, and in this case it's $100,000 that we're paying on. But I just went ahead and jumped to it. So our South Carolina amount is going to be $6,485. So again, we're going to compare this amount that we actually owe to the amount that we withheld. So that's that 7,488. So our South Carolina refund will be the difference in those, which comes out to $1,003. So for terminology and for discussion purposes, we are in the 22% tax bracket. We're also in South Carolina in the 7% tax bracket. However, if we're paying $13,578, what is our tax rate? Our tax rate is 13.58%. So whenever you hear people talk about a secretary pays more in taxes, they're confusing the discussion in tax bracket and tax rate here. And then you can see what it means when you get a refund of $6,934. If somebody were to ask you, how much did you pay in taxes last year? That's not an appropriate response to say, I got back $6,934. The real answer is I paid $13,578. So hopefully this has been helpful of ironing out what the difference in brackets and rates are, as well as how much did you pay versus how much did you overpay, right, when it comes to withholding. So hope this has been helpful. We can do some additional videos here when it comes to establishing the proper tax withholdings, but this is the basics of how income tax works on a very high level here. Come back and see us next time.